Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. If you're enjoying this show, do me a favor, leave us that rating and review. I want to hear what you love about the show, but also give me some honest feedback. What can we do to make it work harder for you and your investing goals? If you haven't done so already, make sure you hit that subscribe button so you don't miss an episode. We've got a fun show today. We're going to be talking to Yannik Cudjoe-Virgil. Yannik Cudjoe-Virgil is the principal of Merlynn Acquisitions, a real estate investment and syndication firm. Now, their primary focus is to provide risk-adjusted value-add and opportunistic real estate investments to busy professionals, athletes, business owners, and W-2 earners. Now, Yannik is also the host of the Mogul Marathon Real Estate Podcast. And with his background, he has experience in commercial real estate, which began as an asset manager, both by trade and retail, working with institutionally capitalized real estate private equity firms. The real estate landscape is changing, and you need to be prepared to take advantage of the emerging opportunities. That's why you should join me and other top real estate investors for the Midwest Real Estate Networking Summit, May 6th and 7th in Chicago. Now, you want to build the connections and partnerships that will help you scale your portfolio. Guest speakers include Jay Papasan, author of the #1 best-selling book, The One Thing; Ray Higdon, network marketing expert and author of Freakishly Effective Leadership for Network Marketers; and Tarl Yarber, Bigger Pockets contributor and the CEO of Fixated Real Estate. Now, join us for the Midwest Real Estate Networking Summit on May 6th and 7th in Chicago. Tickets are available right now at MidwestRESummit.com. Use promo code PODCAST to save on your ticket today. Again, go to MidwestRESummit.com and use promo code PODCAST to save on your ticket. Let's welcome to the show, Yannik Cudjoe-Virgil.
Thank you so much, John. Thanks for having me.
Absolutely. Listen, I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Absolutely. So real estate is my second career. Started off playing in the NFL for the Tennessee Titans. And unfortunately, I had a knee injury. And it's one of those things where you never really think that your career would end based off a knee injury, right? I've had to battle it through a lot of things, but I didn't think that my career was going to end relatively short. But fortunately, I landed into the world of real estate investing. And I am very excited that I got a chance to do that, because the first month within my first offseason in the NFL, I spent $20,000 in 1 month, and I had no idea what I spent it on. And John, let me tell you, I did not want to be another statistic that went to the NFL, made some good money, and then lost it all, right? I wanted to make sure that I had something to walk away with. And fortunately, I picked up the book, like everyone, Rich Dad, Poor Dad, and that really taught me one thing. Well, it taught me a lot of things, but the biggest thing that it really taught me was it's not about how much you make, it's about how much you keep. And that's the thing that a lot of professional athletes struggle with today, is that they spend a lot of money, but at the end of their careers, they don't have anything to show for. So for me, real estate was a great opportunity to pivot, leverage some of the skills and things that I've learned in the professional athletic space, or just sports in general, and find a good way to create generational wealth and cash flow.
Yeah, man, I appreciate you sharing that background. You know, you mentioned playing in the league for the Tennessee Titans and having that knee injury. Ultimately, you had, real estate that you kind of pivoted to, and that book, Rich Dad, Poor Dad, helped you make that transition. There are a lot of people, particularly for athletes, but even for, those W-2 earners, you work your job, you're in your career, and maybe you don't get to decide. You don't get to decide when your career is over, whether it be injury, whether it's layoffs or other situations. That can be surprising for a lot of people and somewhat shocking. How prepared were you for that moment? Obviously you had the knee injury, and I'm assuming you thought you'd rehab it, recover, and then play the next season. But it sounds like it didn't really play out that way. So maybe you give us a little context of how you were able to pivot and position yourself to move into that second career.
Yeah, so it was a little different, honestly, because after I read that book, it kind of just opened a different world for me, right? Like, I spent almost my entire life like working extremely hard to get to the top 1% of my space, which was football. And when you have that injury, it's kind of like your world kind of shuts down, right? It's almost it's synonymous to anyone that has a job and really just can't work the next day, right? But for me, the transition was somewhat easier because while I was rehabbing and trying to get back on the field, I was also on Bigger Pockets looking up real estate terms, getting educated in commercial real estate, all of the things that I think prepared me to take the right steps after I decided to put the helmet down. And I always like to say that education is the great or the greatest way to close the gap, right? It's the reason is because I went to school for kinesiology. It's nothing to do with finance, nothing to do with real estate, but I'm a big proponent of YouTube University, Google University, things on the internet, because when we have a phone and we have a computer, we have direct access to information, and information allows us to take action and turns that into implementation, right? And so that's simply what I did, was that I just got educated while I was rehabbing, and that really helped me pivot into the right steps that I need to take to get into the world of commercial real estate.
Yeah, man. I love that you talked about, while you were rehabbing, you focused on your education, getting on Bigger Pockets. And I think the key insight there is that there are a lot of resources available, and you want to start looking at these options before you have to have them, right? So while you have a job, it's great to be figuring out how do you create additional income, additional streams of income. And, listen to podcasts like this one. Those are some of the ways that you can get exposed to different concepts, different ideas, but also learning how exactly to use that for yourself, your own investing. Bigger Pockets is another great website, certainly other podcasts, different blogs, but learning how to learn is a big step for a lot of people, and having some of that exposure is really key. And the folks listening to this, you've already taken that first step. You're exposed to real estate, you're exposed to multifamily as an option, but there are a lot of people who just don't know. So for you, as you're going through this process, I imagine your teammates and other people around you aren't necessarily going through the same journey with you, right? And they're expecting you to just, heal up and come back next season. So talk to me a little bit about what that process was like for you to kind of go down this pathway, realize, hey, you know what, this is the transition I'm actually going to make, and maybe the impact it had on some of your teammates or relationships with some of the people that you knew from the football playing career.
Yeah. So, one of the biggest things that helped me was that I knew the value of finding a mentor, because it's easier to learn from someone who's already done it before, as opposed to just trying to do everything by yourself and figure it out. Right. Um, and although, I love hard work and I love, dedication and everything that comes with hard work, um, I don't necessarily like to run into a lot of roadblocks. Right. And I think just finding someone that has done things in the space that you want to be in is the perfect way to go. So I got introduced to commercial real estate really through a developer in Nashville, Tennessee. And he showed me a lot of the basics within commercial real estate and the things that you would need to know that are fundamental to accelerate in this business. And, what what was interesting about that was that, that allowed me to become the guy in my circle, right? That talked about something a little bit different in the locker room, right? I started talking about investing. I started talking about finance, all of the things that you don't typically hear people talk about, in the locker room, so to speak, right? And that really helped me position myself to talk to guys after I was playing as well, or even some of the guys that are still playing in the NFL, and show them that, hey, you can actually do this too. You don't necessarily have to just focus on football, right? Um, and that has helped a lot of people in the NFL specifically, or professional athletics, really understand that this game is only for a short period of time. And, like you mentioned, sometimes you can't control things, but what you can control is just your preparation and education and all the mental reps that you could take by just following someone's footsteps and shadowing someone. That way, that when you're in the game, you're actually doing a deal, right? You have some mental reps from just being on the sidelines, paying attention, knowing what to do when things actually become real, right? When real money is invested. So I think those are the two things that really helped me make that transition.
So as you're making that transition, you ultimately launched Merlynn Acquisitions. What led you to create this platform?
I really wanted to create the same freedom and time that it was afforded to me in the NFL. Um, within that particular season, usually you play for about 6 months. Your average year is usually like 8 to 6 months, depending on maybe if you make the Super Bowl or so, right? And then that extra like 3 to 4 months, plus or minus, um, pretty much is just you kind of like hanging out and doing what you want to do and travel and things of that nature, right? And I found that real estate was the perfect vehicle to mimic some of the time freedom that I was allowed while I was playing in the NFL through cash flow. Because the reality is this, cash flow gives you choices. And I don't care who you are, what you're doing, money gives you choices, right? As opposed to working a 9 to 5, you have to clock in. Your boss gives you 2 weeks vacation, maybe some extra depending on how high you are within the company. But I knew that I wanted to control my lifestyle, right? I knew that financial freedom was very important to me, and generational wealth was equally as important as well. So that's what really led me to create Merlynn Acquisitions. Was one, create that financial freedom through cash flow. Two, create generational wealth, and then also help the community and help people that I know in my circle, or people out there, ordinary people who are just trying to create generational wealth as well. So that's what formed me. That's what allowed me to. That's what helped me create Merlynn Acquisitions to the company where we are today.
I think the cool thing is that one, you were able to recognize that, hey, in this off season, I've got time to travel and do the things I really enjoy. How do I get more of that? Right? How do I get more of that? And real estate's the conduit to that. And I think teachers in particular have a similar situation, right? You get the summers off, it's like, man, this is great. This is awesome. You got to go back to school. It's like, how do I get more of that time I had in the summer? So, understanding that, you get your vacation days, but how do you get more of those as opposed to more work days? And don't get me wrong, you're going to work, anyway. But if you could control where you work and how you work and when you work and all those things, it's much easier for you to embrace that, and that time flexibility, that location independence, location freedom, that gives you more control over your life. So I think that's really cool. And then the second thing is the fact that you recognize that, you know what, there are people in my circle, potentially, whether it be athletes or whoever else, they can use this. I need to help them because maybe they don't have the people around them who can help give them access. So you made it more accessible for them by creating Merlynn Acquisitions, going to them and sharing what you were doing. And you already have that built-in relationship where they already know who you are, they know what you're doing, they respect you, and it's going to be easier for you to partner with them. Just talk about that aspect, because a lot of our listeners are, getting into syndication or building up their own businesses. How was it, for you turning around to some of these athletes and talking to them about going kind of full time into real estate and launching Merlynn Acquisitions and working with them on some of their own financial goals?
Yeah, that's an interesting question. So, a lot of people might think that it's easy because you've played in the NFL, or you've been kind of part of that circle. I think you kind of, to some degree, right, at some points run into some of the same roadblocks that everyone else runs into. A lot of times these professional athletes have financial advisors who may not know much about real estate, and the fact that they don't want you to take capital away from their business, they're not going to steer their client. And steering is probably a bad word, right? But they're not going to push their client to invest in your deal, right? Sometimes athletes are just not educated, and a closed mind says no. They might be stuck in their ways, they don't really understand it. I found that a lot of times athletes start to change their tune when they run into either an injury, or either when their career starts to end, right? Because at that point is when you start to realize, like, oh crap, I've got to do something else, right? Those checks are not going to be coming in anytime, or as much soon. So, for me, obviously, I leveraged some of the context that I've had while I was playing in the NFL. But how I look at it is, you really just have to position yourself as creating value, right? Because a lot of athletes honestly just need to be educated on some of these opportunities, and educated on why specifically they need to invest. Because athletes today, for the most part, like traveling, they like doing things. When you're in that specific um, limelight or that circle, um, you're afforded a lot of the luxuries in life that the average person doesn't, right? And so if you can kind of promote your message in a way that, hey, these checks aren't going to be coming in, as frequently as you think that they will, or they're probably not going to be coming in as much, or if any, right after you retire. Investing in a vehicle that is producing cash flow allows you to retain that same lifestyle that you afforded yourself while playing in the NFL or professional athletics. And so, when we talk to athletes, that is kind of like the main touch point that we talk about is, hey, this vehicle is going to help you store your capital and also create cash flows so you can create that same lifestyle that you had while you were playing in the NFL. And I think most athletes accept that message and understand. And I think the modern day athlete is changing as well. When you take a look at LeBron James or Tom Brady or Serena Williams, the modern day athlete has changed. Back in the day, maybe in the early 2000s, we've all probably seen the 30 for 30 broke, right? Athletes are not investing, but today's athlete is a little bit, smarter now. They're more educated. They have access to different opportunities through social media. So they're starting to understand the importance of investing. And it's cool now, quite frankly, right? It used to be cool back then to, buy nice cars and have if you ever been to a professional athletics arena or a practice field or whatever the case may be, it's a car show, right? It's a Lamborghini here, Rolls Royce here, all over the place. They still want to do that, but they understand that investing is really, really important. So I say that to say, for anyone who's interested in doing business with professional athletes, I think that's the best message that you can talk to them about is, how can they retain that same lifestyle? Because for everyone, sports is going to end at some point, right? And so tapping into the emotional connection between that and their ability to retain their lifestyle is a good place to start.
Yeah, I like that you talked about the athlete, but even to expand that beyond, you mentioned that, even being a former athlete, you face the same challenges many people face when you're trying to share what you're doing and how it can benefit them. And I broke them down into two things, right? One is the gatekeeper, right? So who else is influencing this person? Maybe it's a financial advisor who does not understand real estate. And quite frankly, they're not incentivized to have them invest with you, right? If they take $100,000 out of their stock account or their brokerage account, well, that's money that they don't get a bonus on, because a lot of these financial advisors, they're actually compensated based on the size of their portfolio. So they really have I don't want to say an incentive, but they're not incentivized. Yeah, it's a conflict of interest for them to tell someone to invest somewhere else. The other thing, quite frankly, is there's no upside, right? I mean, if the deal doesn't pan out for some reason, well, they don't want that on their shoulders. So it's easy just to say, oh, it's a risky alternative investment. Don't invest there. But you lose 25% of your money in the stock market and they just say, oh, the markets were down, and shrug their shoulders, right? So it's one of those things where financial advisors, in my experience, very rarely would inform a client that, hey, sure, alternative investment, multifamily, yeah, you should own a little bit of your money there. Even if they say it hypothetically, they're probably not going to tell a client to take some money out of their brokerage account to go ahead and invest in an alternative asset. So at least understanding those gatekeepers, and it may be beyond that, right? But anytime you're talking to people, you have to understand who are the key influences in the decision-making process, and then how do you educate them? How do you educate them on how this actually helps the client? But also be open-minded enough to listen so you understand, does it help your client? Maybe that person is not in the position to invest, and maybe they should be doing something else. But it's really important to at least understand who those gatekeepers are. But then the second piece you talked about was people being closed-minded, and maybe they're not interested in having that conversation. And a lot of people have that, it's like a head in the sand type mentality. Things are good now. Why am I worried about it? I've got a job now. I'm making money now. I'm paying all my bills now. I'm not worried about it. You talked about an injury or, getting to the end of your career. And maybe if you're working a W-2 job, maybe you got passed up for promotion. Maybe you want to change your careers. Maybe you're hitting that stage in your life where you're starting to question, what's next for me? And I think that's really important because that allows someone to open up themselves to a different approach, maybe than what they're used to. And if you can understand how to have those conversations with people, and at least to get them to think, and ask them questions that force them to really reflect on their own financial goals, their current financial status, but where they want to be. What do they want in life, and how do you address that? It can help tremendously. So I think the fact that you highlighted, kind of the gatekeepers as well as the mindset of these investors, and those are really the two things you have to focus on. That's key. And a lot of that comes down to education. We talked about bigger pockets and podcasts. You've got your own podcast, right? The Mogul Marathon Real Estate Podcast. As you launch this podcast, what were you hoping to accomplish or convey to listeners?
Yeah. So the premise of our podcast, honestly, is partly from my mission, right? Is to become a real estate mogul. And what we do is basically we have guests on there that enables our guests to show real insights and experiences to help people navigate some of the challenges that aren't necessarily talked about in the real estate industry to get them to the top, right? Because my goal is to become top 1% in my space, right? Did it in the NFL. Now it's time to do it in real estate. And so, the message that we convey within our podcast is, run your own race, right? Because a lot of times within social media and things that are easily accessible these days, it's easy to look at someone else and think, this person's doing it big, what about me, right? But I think a lot of people have to understand that real estate is a marathon. It's not a sprint. It's not something where you just wake up tomorrow and you become a multimillionaire, right? But over time, through curated action, just nice and steady, making moves, stacking those wins over time, after you go through your own marathon, you'll be at the top. And so that is pretty much our message within the Mogul Marathon Real Estate Podcast. Is we want to interview people who are successful in the real estate industry, so our listeners can be a real estate mogul.
No, I appreciate that. We'll make sure we link to that podcast as well in our show notes. I think the thing that's cool too is just understanding that it is kind of a long race. And I think that's one thing that makes real estate, it's some things are very attractive. Cryptocurrency can be very attractive, new business opportunities, startups, right? Because everyone they don't want to miss out. There's a FOMO element to it. But real estate has been tried and true, and in some ways, when done right, it can be even boring. And some people don't like that it's not as flashy. But I do think that if you have a long-term view and you play the long game, real estate absolutely has the power to transform your life. So taking that marathon approach as opposed to just looking for kind of the next get rich quick kind of investment, that's going to serve you really well. What are your principles, right? When it comes back to Merlynn Acquisitions and you're investing, what are your principles? What's your criteria? What do you look for in a deal?
Yeah, so we're primarily value add and opportunistic. So, our focus on the value add is multifamily acquisitions. We've accumulated a portfolio in, Northeast Baltimore City. And, on the opportunistic side, we're working on pivoting into some new construction projects, some development. And what that allows is for our investors to participate in different spectrums of risk, right? You have the value add side where it's not as risky as the opportunistic deals. It provides the cash flow and the tax benefits. And on the opportunistic side, obviously it's, a little bit more risk and greater returns. And so, within our company, that's simply what we look for as value add and opportunistic deals. Particularly in this market today, I think it's really important to focus on fundamentals because, we can't control the economy, right? We can't control when interest rates go up or down. We can't control if Ukraine stops the war with Russia, right? But what we can control is our fundamentals and how we look at deals and specifically how we place debt on opportunities. And I think right now in this real estate environment, it's very tricky looking at asset values, right? Because we've just been out of, COVID where, the Federal Reserve or, they pumped a lot of money into the economy. So asset values shot up astronomically. And so we're kind of like in this paradigm where it's like a bunch of repricing, potentially and things that are, coming down to stabilization. So it's really, really important to figure out, what's your investment worth today, right? And what's the investment potential tomorrow based off of solid fundamentals and things that you truly believe would make a great investment once the market stabilizes, right? So that's essentially our principle in how we look at deals.
Yeah, you talked about Baltimore City, also looking at value add deals as well as opportunistic, more new development type deals, and trying to find stuff that, just works, right? Getting back to fundamentals, not necessarily relying on cheap capital to make a deal pencil and finding deals that make sense. I got this question the other day, and I thought it was a good question to ask other folks. But someone said, "Hey, as a newer investor, what kind of deal should I actually be looking for? You got some opportunistic deals, you've got some value add deals. What advice would you give somebody who's trying to figure out where to get started? Should they look for something that's more stabilized? Should they look for something that has a little bit of value add, or should they look for new development?"
Yeah, I think it comes down to your risk profile, honestly. I think, everyone has different risk profiles within the investing spectrum. Um, and I think starting from there, you should really figure out, what matches you, right? Are you willing to stomach a new construction deal where there's a ton of risk? Construction costs might be volatile, interest rates might impact that as well from a debt perspective, and you might not see any cash flow for 24 months. Versus maybe a stabilized deal that when you buy it, there's already cash flow. You can take all the tax benefits, but the returns are much less than an opportunistic deal. I think starting there, you can kind of focus on which bucket you kind of fit in. And then from there, I think it's important to really understand who you're partnering up with. It's a sponsor, right? If you're not doing your own deals, maybe as a passive investor, because I really truly believe that, you know, um, now more than ever is really important to align yourself with someone who has a proven track record because the tailwinds in certain asset classes I think are somewhat behind us to some degree, right? I think that now more than ever, given the volatility in the capital markets and a lot of things that are somewhat uncontrollable, it would really be important for you to align yourself with someone who has a track record, has maybe done it before, has a solid team, and really isn't too speculative. I think when you just take those two simple approaches, I think that's a good start for anyone who is trying to get into real estate and trying to figure out where to invest, to make sure that their capital, number one, is protected, right? That's how we look at deals all the time is capital preservation, and then we look at returns after that.
Yeah, I love that. We mimic that as well, right? First and foremost, capital preservation. Then you look at the upside, and it's not to say there isn't going to be some risk in the deal, but you'll try to mitigate that as much as possible. So, really good advice on ways to think about it. And I think too, when you hit on your own risk tolerance, you've got to look internally, right? You can't just do what the guy next to you is doing, or the guy you met at a meetup, deal he likes. You have to look at your own goals, your own situation, your own risk tolerance, and then align that with the kind of investments that you want to make. So really good actionable feedback for anyone trying to figure out where they should be focused given kind of the current market conditions and your own risk tolerance. Going back to Baltimore City, I'm very curious, like why that market for you? Like what advantages did you see in that market? And kind of what do you see as the outlook moving forward?
Yeah, so Baltimore honestly has been a great cash flowing market, compared to maybe other cities across the country. It's not where market where you're going to see a ton of appreciation, like maybe California or in Arizona, for example. But you're going to see some cash flow, right? And I think the thing about Baltimore is it's a very block by block city as well, really
Mhm.
scrappy. So you really have to know like where you're investing because at some points, you might be in a great area and the other points you might not be in a good area. But the fundamentals behind Baltimore, which is what I really love, is we have great jobs, right? We have medical jobs, educational jobs, um, uh, jobs that you would think, jobs that we actually know do pretty well during a recession, right? And that's ultimately where you want to be whenever you're investing. Because if you're investing in a market that isn't solid fundamentally, that has one employment base that's heavily swayed based in one specific sector, like for example, Detroit back in the day, right? Heavy car industry, right? When the economy tanked, in the last recession, that entire industry pretty much, went bad. So I think when you take a look at markets, definitely what we do is we try to look for markets that have some diversity in the employment base, but then also some strength within those employment bases as well, to really feel comfortable with investing in that market. So we found that Baltimore City is one of those markets that has really good employment sectors. And then also it's a cash flowing market, which our investors really appreciate as well. So we're big on cash flow first for our value add deals. And, if it's opportunistic, then obviously we need a higher return. But for the most part, Baltimore City is a nice, steady Eddie kind of market, cash flow oriented.
No, I think the thing that stands out is like there's some principles when it comes to investing and understanding how to mitigate risk. And when it comes to the market, you want to look at markets where that job growth, the industries is diverse. You're not relying on one economy. You mentioned Detroit. I was in Detroit at that time, so I fully understand and completely recognize what you're getting at there about having multiple industries that can kind of lift the economy up when maybe one industry is kind of suffering. So I think it's really important, and you've got to figure out how do you mitigate risk. And the market you select is just another component in kind of that risk assessment that you're doing when you're investing in a deal. And going back to the point you made before about, work with operators who have experience and know the markets. I think all those things kind of work hand in hand whenever you are looking to make an investment decision. And the one mistake I see a lot of people making is just doing it by themselves. They've got zero experience. I've never done a deal, but they'd rather just kind of see for themselves what'll happen. And I think that could be risky too. So just, try to step back and be honest about, the way you're approaching it and who you have on your team. And, you can start working with other people. You can invest passively. You can do a joint venture. There are ways to get in here without feeling like you've got to be the landlord and operator yourself. So just make some smart choices there. Yannik, before we go to our run,
just before you jump off, I think that's a key point right there that you brought up, because I've wasted a lot of time trying to do everything myself. I think that was the athlete's mentality that I had getting into real estate was, I can figure everything out by myself. But when I found my partner, things really started to move and move forward in the trajectory that we wanted to get to. And I think, for people who are getting into real estate or maybe have done their first deal in the syndication space, I think one of the things that we are working on as a company is figuring out what's our org chart going to be moving forward, especially as a syndication business and you're trying to do more and more deals. I think that's really important because there's only so much that, if you're a 1 to 2 person, right, there's only so much that 1 to 2 people can actually do when you're taking on more and more deals, right? If you're the operator, right? Someone has to do the acquisition, someone has to do the asset management, who's going to handle the construction management, who's going to handle the marketing, who's going to handle the capital raising, investor relations. And that's really the pieces I think that are part of growing a larger organization, right? Because those are really important facets within a private equity company that needs to be growing for you to do more and more deals, I think, as an operator. And I think, for anyone that is getting into this space, definitely think about that as you get into the space, because not a lot of people talk about some of the tasks that you might have to do as an asset manager, right? We talk a lot about acquiring the property and raising the capital, but once that property is closed, it's yours for 3 to 5 years, right? And you have to handle all of the things that are coming up, whether it's the blocking and tackling and the asset management or executing the business plan or reporting to your investors. So that team aspect or that infrastructure that you talked about is really, really crucial, I think, to being a successful syndicator. So I definitely wanted to touch on that since you brought it up.
Yeah, and I think you did a great job of explaining like how important it is to scale. And whenever you're scaling, I mean, think about it. You could be the best athlete in the world, but if you have no one blocking for you or no one else on your team, you're probably not going to be very successful. So it does come back to the relationships and the team and kind of building the infrastructure for you to see success. And that's the reason you see, syndication as a very attractive model for people, because if the alternative is you wearing all those hats while you've got a full-time job and you have other interests that you want to pursue and, family matters to deal with as well, maybe that's just too much. Most people don't go into real estate because they just want a second job. Most people are looking for the benefits we talked about, being able to travel, being able to be location independent, being able to be flexible with your time. So if those are the things you want out of real estate, you don't necessarily want to sign up to be have a second job and Now you're essentially, connecting with your property manager every day or work with the construction guys every day. So figuring those things out is really important if you want to take full advantage of what real estate has to offer. Give me a failure or an apparent failure that set you up for later success.
Oh man, that's a good question. That's a good question. I think my background is a little bit different because like almost my entire life I've been in sports, from high school to college to the pros. And really I would say like my real outside of sports for my professional career has been like 5 years outside of sports. So as far as failures, there are a lot of things that I wish I would have done better. But what I would say is that I think for me, it's all been about mindset, right? And really believing in yourself. And the reason that that's important, the reason that I would say that at times it was a failure was because a lot of times as investors, I think when you're growing a company and you're dealing with the world of entrepreneurship, you can be in your head a lot of times. And a lot of times the progress that we want to make depends on what's between the 6 inches, right? If you're looking at the camera, it's between ear to ear. And most of the trials and tribulations that I would say that I've been through, or the failures that I've been through, a lot of times have been mental blocks, because of mental blocks. Whether I think that I couldn't do it for some reason, or I thought that I wasn't good enough, or I had the this idea like maybe I was pretending. I had this I forget what's the syndrome that's called
syndrome.
When you're imposter. You're right, imposter syndrome, right? And I think once you're able to overcome that, I honestly think the sky's the limit, right? Because at the end of the day, I think that those are the soft skills that really help people get to the next level, right? I think in real estate, it's between the technical skills and the soft skills. The technical skills are the ones where you underwrite, you know how to maybe evaluate opportunities, put debt on properties. But I think the soft skills, whether it's having a strong mindset, right? Knowing how to close a deal, knowing how to raise capital, knowing how to leverage relationships to get to the next level. All of the soft skills, I think those soft skills, or the intangibles, are what separate people from good and great. So I say that to say, mentally, I think part of my failures that have occurred for the most part have been mental blocks between the 6 inches in my head. And I think when I was able to overcome that, that's actually when I started making strides within my business. So I think that's applicable for most people in the world of entrepreneurship today.
All right. Give me a digital or mobile resource you recommend for your business.
So we use Trello. We use something called Trello for our construction management on our value add deals. And it's a really cool app. It allows you to create different cards for different properties, have templates, some of the hacks that we love as a firm to use technology for, and really allows you to communicate between different team members. And it's an app on your phone as well. So I think that's something that we use that I think a lot of investors would be appreciative of.
Give me the book you recommended or gifted the most in the last year.
Oh man, so one of the books that I recently gifted was a book called The Peebles Principles by Don Peebles. And it's a really good book because, as I mentioned, our podcast is called the Mogul Marathon Real Estate Podcast. And he's one of the most successful African-American developers of all time, honestly. And I think those principles within his book is something that all real estate investors really need to understand. Something as simple as just controlling the deal, right? It's something that's really, really important when you're getting into the world of real estate and putting yourself in positions to be successful. So The Peebles Principles by Don Peebles.
Great book there. All right. Give me a daily habit that helps you stay focused on your goals.
Yep. So every day when I wake up and I get to my computer, I use something called Asana that allows us to have different tasks. But I think as an entrepreneur, it's easy to get distracted. And in our world, it's about focusing on revenue generating tasks that would actually create revenue, but also move the business forward. So every day that I wake up, I have these sticky notes by my desk, and I try to mark things down from urgent and important and everything else, right? And a lot of times urgent and important might be situations where your property manager might text you and say, hey, we have a sewer line issue, right, that you got to deal with. Or maybe you're trying to get to closing on something. But the point is that I think if you're systematically looking at the tasks that you're doing on a daily basis and figuring out a way to really break it down in ways that are deciphering between what I should be focusing on that's actually driving my business forward versus everything else, like answering emails that is not, I think that's a great way for people to really boost their productivity on a day-to-day basis. So that's what I do every single day.
Give me your number one insight for multifamily investing.
Yeah, so our number one insight, it's a good question. A lot of different insights. So I would say the number one insight is definitely having structures within your multifamily operations. Because as I mentioned earlier on, is that, the real work starts when you actually close on the property. And if you don't have the systems and the workflows that's important to help you sustain the business while also delivering for your investors, something as simple as creating reports, right? I mean, your property management company might create reports. You may not, your property manager may not have the ability to create reports, but someone has to communicate with your investors, right? And you definitely have to have that workflow in those systems. I think that's an insight that's not really talked about a lot, is having that structure so you can still be in acquisition mode and capital raising mode if you're still looking to acquire more and more properties.
I love it. All right, we're going to lighten the mood, man. You are out there and kind of, you're out near Baltimore, right?
Yep.
All right.
Yep.
So give me your favorite place to grab a bite to eat.
Favorite place? Oh, man. I haven't really been out too much, but what I would say is that there's this place called Jerry's that's really, really good. It's, if you know anything about Baltimore, we're all about crab cakes. And, Jerry's has some really good crab cakes. I love crab cakes. It's a part of the Baltimore city, Baltimore, Maryland type of culture. So if you're in Baltimore or just Maryland in general, definitely Google Jerry's because they have really, really good crab cakes.
There you go. Well, listen, Yannik, you gave us some great insight. I appreciate hearing your story from the NFL into real estate and really understanding that, you were able to take advantage of, the education you were getting, reading books, getting introduced to real estate investing, but also helping some of, the athletes you work with, but not just them, other professionals, other entrepreneurs, helping them understand, how real estate can transform their lives and give them the kind of flexibility that they're looking for. In addition to that, you talked about some of the challenges that, anyone faces as a syndicator raising capital and why you like Baltimore City, looking at your value add approach, but plus your opportunistic approach, giving you two ways to kind of source deals and look for opportunities. I think it's just really helpful for us to wrap our heads around what we want to see and the way we want to approach the marketplace moving forward. Again, if anybody wants to learn more or connect with you, you can check out his website, Merlynn Acquisitions, MERLYNN acquisitions.com. And then you can also check out the podcast, Mogul Marathon Real Estate Podcast, anywhere you listen to podcasts. Yannik, I just want to thank you again for coming on the show today. Great talking to you, and I hope you have a great one. Take care, buddy.
Thank you so much.